Stacy, we've been talking a lot here about how politics, geopolitics, I should say, have really become a much more disruptive factor for this industry here. When you hear this type of language, investment controls, investment barriers, things like that, coming out of the U.S., do you anticipate a material impact on some of these companies?
Well, there already has been, right? They've already put export controls on a fairly wide amount of semiconductors, although they've tried to target them. Most of the stuff that's been impacted so far, it's been high-end chips for artificial intelligence, chips for supercomputers, and semi-cap, particularly for leading-edge logic as well as for memory. So that's already been done. There's been some speculation that those export controls may be broadened. We haven't heard any details yet. And then, as you make the point, there were some comments today about casting a wider net in terms of limiting investments and other things in the China ecosystem around some of this stuff. But it's already happening. Like, it's not like it's new. It's here.
Oh, absolutely. I know we've talked to you about this before. And I remember maybe a year or so ago, we were talking to another expert in this space. And there was a whole conversation here about who in the chip space can sort of navigate this, who could be, I guess, that proverbial Switzerland out there, and if that climate is even going to allow for a company like that.
Yeah, again, like I said, so far the restrictions have been targeted. They have not been trying to completely chop China's knees out from under them. And the companies that have been impacted so far, NVIDIA to some extent, because the high-end AI chips were limited, although NVIDIA was able to develop some other products that were able to work around. The ones that actually have seen the biggest impact, frankly, have been the semi-cap guys. They are not allowed effectively to ship almost any tools to any of the memory players in China, yet a few of them there. And then you had, again, they were limited in terms of the leading edge logic that you could ship. And so AMAT and Lam and all of these guys have talked about the impact from this. And it was sizable. It was, I think Lam at one point had said it was $2 to $2.5 billion of impact.
Wow.
Lam said something a little interesting last night, though, regarding to China. Two things. One was that they've taken a cleaner read of the regulations, and they believe they can ship a little more into China than they had originally thought. Maybe a few $100 million. So that's positive. And then they also suggested that there are some new customers, I guess mostly in China, that they're selling to that they haven't sold to before. They've actually collected some cash up front that they'll be booking as revenue into the back half with some of those. And so I don't exactly know who those customers are at this point. But it does look like they're trying to work around this stuff, and both them and in fact all the semi-cap guys trying to work around it as much as they can.
Janet Yellen said today that the U.S. is prepared to accept some economic costs in order to protect national security goals. I'm curious what you think the semiconductor companies see that as. How would they quantify that?
Well, again, there's the direct impact. You were shipping stuff and now you can't, right? So that's in some of the numbers. Although even with some of that, like again, on the semi-cap side, you figure over time, if it doesn't get built in China and the demand is still there, it presumably will get built somewhere else. So it may be temporary. I think there are broader issues, though. I mean, if you've got supply chains in general that are picking up out of China and having to move elsewhere, that's a cost that has to get borne. And there's the cost to move, and it also may prove more expensive to make stuff elsewhere versus where you're already located in China. So those are costs.
Right.
I think there's longer term issues. I mean, at some point, people are worried about like a broader China, versus the West, like a China decoupling. Do you all of a sudden develop like separate and distinct supply chains? I mean, China's a big market for semis and lots of other U.S. companies. Does that market in general become less available over time? And if that demand starts to get satisfied locally, that becomes an economic hit, clearly. And how to size it, I don't know at this point. And
yeah.
We'll have to see how it goes as we go along, but there are clearly costs associated with that.
Yeah, well, that would be meaningful because that would be a loss of a key customer there. I want to go big picture here with you now, Stacy. When it comes to the supply picture for the chip space, we went from shortage to glut and now very much clearing that oversupply. That continues to be the narrative. Where are we with achieving balance between supply and demand?
Yeah, it really depends on the end market. So let me take one at a time. So all of the stuff that was really positive during COVID, especially on the consumer side, it was PCs and smartphones and graphics cards. That's all heavily into correction. They were over shipping and now they're under shipping. I think graphics cards, like the gaming stuff that NVIDIA and AMD do, that probably corrected the most rapidly, and that's probably bottomed and that's recovering now, and there's some product cycles there. PCs are now firmly into correction. Both the end markets, we were 40% above pre-COVID levels at the peak for PCs, and we're probably run rating right back to pre-COVID levels now. And CPUs, which were over shipping by 30% at the peak, they're now under shipping by 20 or 25. So we're in the meat of the inventory correction, though we're probably got a little ways to go. Smartphones, similar. We're in an inventory correction situation, although at least smartphones didn't overship during COVID. They didn't over-earn.
Yeah.
I think the thing that's causing a little more angst today is automotive. So auto has been this like bastion of strength, and auto's been holding up really well, and supply's been really tight. And I've been concerned about the same kind of overshipment in auto frankly, we've been making that call for a year and a half. It always takes longer than you think. TSMC reported last night, one of the comments they seemed to make was that they saw auto maybe softening in the back half. And so some of the auto sentiment now is people are starting to worry about that. So it really depends on the end markets. It's sort of an asynchronous kind of cycle. They're all kind of different, but we're at various degrees of that behavior. And I want to stress by the way, this is not abnormal. This kind of overshipment, undershipment, inventory, this is why cycles happen. It's not unusual. But we had a big upcycle. Right? So we're coming to the other side of it now.